Okay, 14.1, we're going to talk about uncollectible accounts receivable. We have 3 learning objectives for this section. You need to be able to explain the purpose of the allowance method for recording losses from uncollectible accounts. You need to be able to estimate uncollectible accounts expense using an aging of accounts receivable, and you need to be able to record the adjusting entry for the allowance for uncollectible accounts. So first slide here is just some definitions. Uncollectible accounts are any accounts receivables that cannot be collected. So what happens is people are buying from us on account, they owe us money, and we're not collecting money from them. Okay. Some businesses refer to this as bad debts. Bad debts, uncollectible accounts, same thing. Crediting the estimated value of the uncollectible accounts to a contra account is called the allowance method of recording losses from uncollectible accounts. And that's what we're going to be using is this allowance method. Okay. Remember, a contra account is something that decreases that controlling account. So a book value is the difference between an assets account balance and its related contra account. So remember, a contra account decreases the controlling account. However, we don't want to actually just decrease that controlling account because we want to keep track of what we have for uncollectibles. So we're going to put it in a separate account, hence our contra account. Okay. The difference between the balance of our accounts receivable and its contra account, the contra account is called allowance for uncollectible accounts, is going to be our book value of accounts receivable. The amount of accounts receivable a business expects to collect then is called the net realizable value. There are 2 methods that are commonly used to estimate uncollectible accounts receivable. The percentage of sales method, which assumes that a percentage of credit sales will become uncollectible. So we're just going to, all sales, credit sales, we're going to assume a percentage of them will not be collectible. It's part of doing business, okay? We know that we aren't going to collect on everything. Okay, and then we also have the percent of accounts receivable method, and this uses an analysis of accounts receivable to estimate the amount that will be uncollectible. Aging of accounts receivable is analyzing our accounts receivable according to when they are due, and I'll kind of show you more of that in a little bit here. Okay, so this is kind of our table to help us look at our aging of accounts receivable. I'm going to kind of put all of this. Oops, sorry. Okay, so up here at the top, we're going to look at this table first. And so we see our customer, we see the account balance, we see what their current amount is that they owe us. And then we also see, notice they've broken it into columns as to how late they are. So this means that they are 1 to 30 days late with payments. This is 31 to 60, 61 to 90, and over 90 days late. Okay. And then down here at the bottom is the percentage of what we're assuming that we're not going to get back. Okay, so what we're really saying here, and then they've broken it down, they've kind of taken this information up here and they've brought it down here. Okay, so I'm gonna now look at this one. We're saying, okay, currently we are owed $11,774. That would mean that they're going to pay things on time. We're going to assume 1% of that is going to be uncollectible. Okay. Now, when we get to this grouping here, this is saying that they are past due 1 to 30 days. We're going to assume that this amount, 5,557, since they're already past due 1 to 30 days, we're going to assume now this goes up a little bit. So now we're going to assume 4% is going to be uncollectible. Okay. Now we go down to 31 to 60 days. Now they're even farther past due. So now we're going to estimate 12% of that is going to be uncollectible. 61 to 90 days, we're going to assume 30% is uncollectible. And if they're over 90 days late in paying their balance, we're going to assume that 80% of that is going to be uncollectible. Okay, so all we did then is we took the amount times that percentage to figure out what amount then will be uncollectible. And then we added that all up to get our total estimate. So we're estimating that $2,509.25 will be uncollectible. We will not collect on those accounts. Now, this is showing us a balance that we've already put in an allowance for uncollectible. So the way that I think of this is that we have this account set on the side for our allowance money, and we're going to use that money to cover our uncollectible accounts. Now, we have $125 in that account. Well, we need 2,500, so we're subtracting that to find the difference. This tells us that we need to add in $2,384.10 into that allowance for uncollectible accounts so that we can cover when people don't pay. So here's what our adjusting entry is going to look like. We're going to make this adjusting entry. Okay, adjusting entries are done on the last day of the accounting period. So we're going to debit our uncollectible accounts expense for that amount that we figured out on the previous slide, and then we're going to credit allowance for uncollectible. Here's what it looks like when we look in our T accounts. We're increasing that uncollectible accounts with a debit, and we are increasing that allowance for uncollectibles with a credit. Now, accounts receivable is that controlling account, and allowance for uncollectibles is going to be that contra account. So really, in the end, and we'll see this when we get farther in our accounting, this is going to end up decreasing our accounts receivable, but we want to keep this allowance account separate so we can keep track of what was uncollectible and what was not. All right, so I'm going to go through these questions. I'm going to give you a couple seconds to think about these questions. It's good if you could answer them on your own instead of me just answering them for me. So even if you want to pause and kind of think about it or look up the answer before I give you the answer, that would be awesome. Okay, number one, what general ledger accounts are used to account for uncollectible accounts receivable? That is our contra asset account, allowance for uncollectible accounts, and then the expense account, uncollectible accounts expense. So when we think of this as an expense account, like I said, it's part of doing business. If we're allowing businesses to buy on account from us, we have to realize that we're not going to collect from all of them. Okay? So that is an expense to our business. Number two, explain why an adjustment for uncollectible accounts is an application of the matching expenses with revenue concept. The allowance method of recording losses for uncollectible accounts attempts to match the expense of the uncollectible accounts in the same fiscal period that relates those sales that were recorded. So we want to try to make sure that, okay, if we sold something and we have in that accounts receivable and we're not collecting on that, that's an expense. We want to record that sale and that expense during the same fiscal period. Number three, what are the two methods used to estimate uncollectible accounts receivable? The two are percentage of sales method and then the percentage of accounts receivable method. Number four, how is accounts receivable affected by the estimate of uncollectible accounts? That was a trick question. Accounts receivable is not affected, okay? We are going to change the contra account. So in the end, okay, it's going to end up decreasing our accounts receivable, but as of right now, it does not affect our accounts receivable. Okay, that was the end then of lecture for 14.1. You can now go to the 14.1 work together video and follow that while you are doing the work together in MindTap. Again, just a reminder, make sure that you are emailing me with any questions that you have. no matter what it is, just email me. My email again is johnsoj3@fargoschools.org. Thanks, guys. I look forward to hearing from you.